Well, who caused inflation? Banks. Banks are the only ones that can inflate the money supply. Life insurance companies cannot increase the money supply. Let's go back to the video that we did here years ago, Banking with Life. Remember Paul Cleveland? Remember he said that wealth is goods and services. Money is the medium of exchange whereby we acquire these things. The problem is that the banking function has been captured by the bankers. They're the ones who increase the money supply. There is real money out there trafficking at the same time funny money is trafficking, the bankers type money, the funny money. There's that sterling example of the greatest race riot in the history of the United States in Tulsa, Oklahoma. This black community was rather wealthy compared with the other folks in town. 50 blocks of it. Well, it's a tragedy that they had that race riot that killed over 300 people, but what's left out is how did those folks get wealthy? Money in that community turned over 30 to 100 times before it ever left the community. That's the secret. Whereas the funny money that we have, it doesn't work that way at all because it's not real money. When you go pay a life insurance premium, that's something that you worked for to earn, right? All right, so now you have money. That is a token of the value of your efforts that you put out. All right, now you give it to a life insurance company. They put it to work in various and sundry places. They can put it together to work with you, as I describe in my book. They cannot inflate the money supply, but this is not taught. Do you think the bankers would want you to know? No, to the contrary. But it's not talked about. It's not talked about in universities. It is not talked about in home offices of life insurance companies. That's the tragedy. To the contrary, home offices have pursued other things out there like managing assets and so forth, like tax qualified plans, etc. That should never occur, really, when you think it through. And it's so simple. Well, consider this as to what's happened. You know, a little over 2 months, I'll be 87. 20th century was the bloodiest century of all time. Craziest things in the world happened. Should never have happened. One of the things that's a common denominator throughout it is this thing called inflation. Inflation is an increase in the money supply, whereas most people hear the word inflation, they think that's an increase in prices. But look, I got out of college in 1952. I was an ROTC student in school, so I had to go on active duty for 2 years. Do you have any idea what a second lieutenant's base pay was in 1952?
I don't.
$213.75 per month, every month, whether you needed it or not. We had $75 housing allowance and $42 food allowance. And do you know we lived very well off of that compared with everybody else? But what's going on today? See, in the course I teach that my wife says, "Oh, aren't things expensive today?" My response, "Babe, what are you thinking about? Give me a product, give me a price today." Now, whatever that price is, I want you to divide it by 5 and think about we were married 65 years ago. Everything will pop into focus. I remember buying chicken breasts at the commissary at March Air Force Base, California. 1953, it was $1 a pound. You'll be going to where I live later on today, and there's a shopping center there. From time to time, early in the morning, I'll go over in the parking lot where there's no traffic, no cars there, and ride around. I saw boneless, skinless chicken breast, $1.49. To obey the 5 factor, chicken breast today would be over $5 a pound. Chicken's gone down, but my wife sent it up. Because you see, that is the sort of stuff that prevails out there. That's the noise, the financial noise that we hear every day. And it's not true at all. Chicken's gone down. My wife said it went up. No, didn't. Now, there are many other examples like that, but people just don't think this way.